Gang, okay, welcome to the video of the library. All right, now, I want to explain to you, I heard Cramer make a call today. It was unbelievable. Here, let's just start, and you'll see what I'm talking about.
Hey, I've got a lot of hogs, and it's gone down about $10.
So you got to take a longer-term view on that one. Now, candidly, I do prefer Polaris PII. I think it's better than hog, but I understand, and I think that you can own hog because it's a long-term play.
See, they always do that. Hey, stay in it. It's long-term. Well, wait a minute. You got to have great sustaining power. The guy's already down 10 points, for heaven's sakes. You don't give information like that. Also, using a chart, he should have explained to the guy that this was a short. He should have never been in it long, and it's only going to get worse. First of all, he should have pointed out that not only has the stock fallen below the 50-day moving average to 25, but now the 200. He should have explained, why would you get into a stock when you're breaking this 50-day moving average and you have a series of what we call lower highs? Okay, why would you do that? Nobody would do that. And once you're underneath these moving averages, especially the 50-day moving, you can't recover. Look, every time, see this right here? You can't recover. It's almost impossible to recover. You got to have some real firepower to recover from these, and it just gets worse and worse. So you see, Cramer missed an opportunity to teach a person why this wasn't a short. He should explain why it wasn't a long, why this was a beautiful short, and next time he wouldn't get in trouble. He should also point out right here, once you cross that 200-day and you got the crossover at the 25, and soon the 50's going to cross, this thing could go down another 20 points. What a terrible, terrible recommendation, but advice he gave. Oh my God! Then I couldn't believe this recommendation.
I would like to ask you an expert opinion on Synchrony Financial. What do you think?
I like Discover. I think Discover's better than Synchrony. I don't want you in Synchrony.
Wait a minute. Discover, he's putting this guy in the same place as the other guy. Look, momentum's going down. Are you kidding? What is wrong with Cramer? For God's sakes. Look, there's your high. She pulled back, little snapback here, lower high. That sets up for a beautiful short. Remember, I always teach you, when you have a lower high, this is where I love the short right here. And anytime it breaks 80%, right here, look at this. It broke 80. This is a beautiful short. And look at this. Look at this. And it broke the 50-day moving average. He should be telling people, get out or switch and short it, or at least wait for another snapback like this and then drop again. So you can see the difference between fundamentals, can't you? And using a chart, what a difference. It's like going on a road trip and you have no idea where you're going, you have no map. That's Cramer. Okay, that's fundamentals. Okay, he goes on a road trip and he has no map, no nothing. And he thinks he's so smart, he's going to be able to, guide himself through. Here, you go on a road trip with your maps, your GPS, you go on with all kinds of good information, and you'll have a wonderful trip. These two guys that call for information, these poor souls, okay, they don't know what they're getting into. So there's the point, that your charts, when you break moving averages, you can't recover. When this is broke 80%, you can't recover. These are shorts, not longs. Hope you enjoyed this, and this is why we do use charts, because what a difference it makes, because you're following the money flow instead of information from people like Cramer. See you on the charts.